Good morning, good afternoon, good evening, whenever you're watching this. This is Taylor Watson, What's Investing, and today's video is another portfolio update. So today is the 12th of October and we'll be looking over both our Sharesies and our Hatch portfolio, showing you our dividends in the past probably a month or two since our last update, showing how the holdings are going, the weightings, and just how everything's changed and how our portfolio is tracking. So at the moment we're looking at pretty low risk, pretty high risk but pretty low risk. So as you can see, we're 7% low risk, 10% medium, and 83% high. So I think this means basically this is like our ETFs and our indexes and everything in the lower risk, and then the high risk is all of our companies, which we have shifted mainly over to. At the moment our portfolio is returning a nice 9.7%, almost at that 10%. And we are looking at $600 in New Zealand return, and this includes our dividends. And then over the 6 months, we'll just go for a year, you can see that we were going up and up and up. Then COVID hit, then we averaged down our prices, and then we've been building our capital up since then. And then over the past few months, it's basically just been rallying off America and actually some of the New Zealand energy companies recently, especially in the past few weeks. So our holdings have gone down from like in the 60s to now I think we have like 32 or something holdings. So we've dramatically reduced our portfolio, and this is healthy for the portfolio. It's much more manageable, and I understand more and more of the stocks that I'm holding a bit more now. So I think we've still got some room to thin it, about 5 or 10 more to go, but I think that'll take some time to thin out. So 3M, Triple M, our subscriber fund is performing well at 3%. In New Zealand is down 17.5%, and this is probably our worst performer at the moment. And yeah, that's obviously because of COVID and the government loan and just high risk there. But it's going to be interesting to see how that one goes in the long term. And then we've been increasing our holdings in Apple, AT&T, Coca-Cola, and all those American stocks that we've been getting into in the past few months. Contact Energy has recently just boomed. I think this is because the New Zealand government announced they want to support the Twire Point to maintain running for I think another 2 to 5 years or something. And also a global index announced that they might be including them in it, which has the potential for a lot of purchases of the shares. And then we've been tracking along. These ones have been pretty stable recently, not much happening there. Hellenstein's has boomed to the announcement of a December dividend, which I will be receiving probably about between like $20 and $30 in dividends, depending on how much I invest in the future. And it recently was our highest dividend in September, sitting at 13.56 New Zealand dollars in one go. And that's huge because our last dividend payment from them was like $3.20, and that was our previous highest dividend, so it's a huge increase there. We swapped over our US 500 fund from the New Zealand version to the iShares core version for a higher dividend yield and better performing growth in the long term. It seemed a bit different. Then everything else has been pretty much the same. Kiwi Property Group has seen some recovery over the months, which is good because this was another one of those holdings that was not, it was underperforming really. We keep dollar cost averaging into the rest of these American stocks as they have high growth rates, high dividend growth rates, and great futures ahead of them. Again, Meridian Energy, another one of those energy companies, looking good. NZ Wind Farm's not looking as flash, and we saw roughly a $4 dividend from them, which was great. Forgot to reinvest that, but we'll see what happens when I next put some money in, and we'll figure out why the stock is performing badly. It might be because of future growth looking grim. Lots of our ETFs have been rallying upwards in the recent days, especially the NZ Dividend Fund. It was sitting down like 2% here and then just went bang. Now that's up 20% higher than there. So it's been seeing great returns there. Somerset again, one of those just growth stocks, looking flash. Tesla as well. Westpac, it's unsure what Westpac's up to. It's just bouncing all over the place. But we'll be looking to put more and more money into that as my savings account provider, and it seems kind of logical to put my money there if they decide to pay a dividend in the future, because their dividend will be greater than the savings rate. So we'll move on to our hatch portfolio now. Yeah, so our hatch portfolio again is just holding our Tesla stock, which is I think 2.2 shares roughly, and we bought in I think at an average cost basis of $316. Yep, so we had 3 purchases there, and the current price is much higher than that, but we'll put it back to NZ, and so that's huge. We put about 170 NZ dollars here, and it's returning very well for us. It started off grim when we first invested, so I put more in, and again put more in, and then it's just been performing well, and we've moved it over to Sharesies to keep investing through the weeks into Tesla, and I'm looking to transfer this onto Sharesies, just emailing between the finance companies to try and figure out my shareholder number and my CIN, SHN, and all that to try and transfer it over, but I'm yet to get a response, so I might have to try that again or ring them up, because it could be super sick to see that all in our Sharesies portfolio. Moving on to see our kind of thinned out tracker. We have a lot going on here now, as September was a huge month for dividends. Annual dividends has hit $60 for 2020 and $75 overall, which is huge. At the moment, we are sitting at a $6 per month average dividend for this year, which is great. That's about $1.20, maybe even $1.50 per week, which is great. We want to see that number getting up to maybe $5 by the end of next year, which is just huge. It's just easy money. And our per month Sharesies fee is that $30 subscription fee divided by 12, so you got to remember to take that off, and then we'll still be sitting at a nice healthy number, as that is a flat fee that has growth to come. So our total unrealized gains is, comparing our money invested, this number is quite rough. I just tried my best to get it accurate by taking away fees and all that, and just saying the raw number that we've actually put into stocks, and then our actual value, and then got the unrealized gains, which is just the difference in value. This value also includes the dividends reinvested in the value, but not reinvested here. I've just taken that as wallet investments. So it might not be the proper way to do it, but it works in my head, and I see what's going on there. And then we compare the dividend yield to, I think that number, I might have done, to that number. So that's how that's looking. Our quarterly dividends has been growing and growing and growing at quite a steady, well, not steady, but quite a high rate, which we hope to see continuing in the future. We recently hit about $30 for quarter 3 of 2020, and that's just huge, because September raking in that massive, even with Hallenstein's being $13.50, we still hit another $12 from the other dividends. So I think 5 was from, or 4 to 5 was from the NZ Wind Farms, but there was still heaps. I'll actually show you heaps of dividends coming in at September. There was Somerset, there was Contact, which was another big one. There was NZX and NZ Bond Fund, another few big ones. And then just the rest were a bunch of 20s and some Microsoft as well. And in October, some of these monthly stocks are coming back, like the Total Bond Fund, Realty Income will be coming, and these Global X ones again. And hopefully these numbers here will just be climbing and climbing and climbing on those monthly stocks. You can actually see those returning a greater and greater amount. And then we've just got all these numbers here to calculate everything on these graphs. You can see our average dividends received going up, our dividends per month going up. Next year we hope to see a less bouncy one as I get into these monthly stocks and these US stocks that pay at different dates. So we hope to see kind of more of a graph like this, less up and down and more like steady like that. So that should be sick. But we'll go here just to compare the monthly dividends 2019 to 2020. So as we mainly started investing in 2019 about here with some of our money, and just before September, that's where you'll see our June and October dividend being greater, and then of course the December being the best as we invested in those June paying stocks afterwards as well. But 2020 reflects our investments a bit better, as it sees January and February being small, growing into March and April, seeing June be huge, and then seeing September be bigger, and then December again should be bigger than these two by far. Maybe even combined. I don't actually know what I'm expecting for December, assuming no cuts or removals and stuff like that, but it should be huge. So yeah, we'll look at the weightings now. Now this is scary for some, but not for me, because I'm a big believer in Tesla, and this is our weightings. I think I'm done it all right, and it compares the market value to the allocation to each other. And we've got a market value of about 8,070 with only like 7,300 invested. So we're looking at about $700 of gains there, which is huge. That's like that 10% number I was talking about earlier. This is great for us. I didn't expect that this year considering COVID, but we are performing very well to my expectations, and we are looking to grow in the future as well, especially with these dividend increases coming in from like Microsoft, McDonald's, Realty Income Corp, and I can't remember the other one. There was another one, it might have been Colgate or something also, and then expectations of Visa. So we're looking to grow those stocks especially. But you can see our holdings here in order: Tesla, Hallensteins, NZ Midcap, Top 10, Westpac, Triple M, which is our subscriber fund. So if you don't know what that is, every subscriber, I put $1 into Triple M. Every referral on Sheezy's, I put the referral money and $5 to match it of my own into Triple M as well. So if you want to get on that, make me spend some money, do that. And then we've got the rest trailing down, and our smallest being Nvidia and Visa. But I think I want to get Visa to be a bit bigger, and MasterCard, as those are the tech financial growth stocks of the future. And yeah, that is how our portfolio is tracking, how everything is going, and I'm pretty happy so far. So yeah, if you got any questions, leave them in the comments below. If you want to stick around for future videos, look in the past, leave a like, subscribe, all that, and I'll catch you next time. Happy investing.